You just heard Barry Sternlicht's comments. Do you agree with what he has to say?
Well, Barry's definitely at the heart of the storm in real estate. And you say, who's facing the brunt of the higher rates? If you're doing a lot of real estate development, your borrowing costs going up. They bought a lot of buildings with cap rates that are much less attractive today. So you can understand his pain. I'd say, you saw some signs in that McDonald's and Starbucks that he talked about, but it could be just taste that maybe they raised their prices too much. In general, the economy's held in there quite well. You haven't really seen unemployment tick up. We've been describing it as goldilocks, where not too hot, not too soft. Earnings are doing well, and so I don't think there's broad weakness today.
All right, so there's not weakness. We're seeing earnings come in better than expected. So then why are you so bullish on Japan as opposed to the U.S. equities? You kind of gave us a pick today, the DJX ETF. You're actually talking some of your own book. You believe there's a lot more upside when it comes to Japan.
Well, it does come to valuations. And I'd say, I think one of the master value investors, you heard, I was listening to Becky's interview of Warren over this weekend at the Berkshire Hathaway meeting. The S&P is at 21 times earnings. That's a 5% earnings yield, sort of real return expectation. Maybe get 7 to 8% nominal if you add inflation. You're starting in DXJ with a 5% carry because of where the Fed is versus Bank of Japan. So you start off getting paid 5%. Then you have the stocks with the 3% average dividend yield, a 14 PE, so like a 7% earnings yield. I think there's a good possibility, and I would bet on it, that Japan DXJ could outperform the S&P over the next 5 to 7 years because you're getting the carry, you're getting cheaper stocks, positive corporate governance, combination of that.
We're seeing it right now up year to date over 23%, so outperforming the S&P so far this year. One other thing that's a concern for Japanese equities and really all global companies, the rise in the dollar this year. Looking at the dollar chart, up 4% this year. That's something you're watching as well. How does it inform your investment decisions?
Well, I think it's one of those things people don't have enough exposure to in their portfolios. When you talk about, again, Starbucks, McDonald's, the global companies, they have exposure to a weak dollar. When the dollar's rising, it hurts their earnings. And so a lot of people, when they go overseas, they take the euro, they take the yen, they go what's called unhedged and add in this extra currency. I think they need more strong dollar exposure in their portfolio to hedge earnings risk. It's been an exact opposite of bonds, whereas bonds aren't diversifying stocks, the dollar is.
Give us a quick example, a strong dollar investment. What would that be?
Well, going long the dollar. You could go, instead of going short the dollar, there's funds that go long the dollar. DXJ is an example of long the dollar if you do it versus unhedged. So it's just not taking the sort of dollar bets.